Hello, everyone. Happy Friday. So, we are back for another weekly recap. So, we're going to jump right into it. So, this week, Amazon announced that, well, they didn't announce, it was announced that Amazon has agreed to settle a lawsuit with the FTC, and they're going to pay a $2.5 billion lawsuit settlement, excuse me. And so this is like one of the top lawsuit settlements in like of all history. And so just to give you some backstory, so the FTC accused Amazon of using deceptive business practices in terms of their Amazon Prime memberships. So they were first accusing them of kind of trapping customers into signing up and then making it hard for customers to cancel their membership. So this lawsuit was filed back in 2023. And so here we are about 2 years later. And instead of going to trial, they have decided to settle. Now, just for context, Amazon made 44 billion, yes, with a B, dollars last year just from their Amazon Prime subscriptions. So I tend to look at this as these companies operate from a mindset of it's better to ask for forgiveness than to ask for permission. They many times knowingly are doing these deceptive and sneaky business practices, but because it's not breaking the law, it's like that fine line of being illegal or just unethical, and they have no problem being unethical, right? And so paying these penalties are really a minuscule amount for these larger corporations. So sometimes to them, it's the cost of doing business and they're willing to pay the cost, which is sad to say. So, anyway, as of right now, we don't know exactly how it's going to work in terms of filing a claim to receive a refund. Now, I don't think I mentioned this, but I did post a short where I do talk about this in case you didn't see it. So, of this 2.5 billion, 1 billion is going to be paid to the government in form of a civil penalty, and the other 1.5 billion will be paid to customers in a form of a refund. So as of right now, we don't know again how that's going to work. Usually with these settlements, customers must file claims, but in some instances, they will send refunds automatically based on whatever reports they have. So it's TBD on that. This was just announced this week, so I'm sure it will be well into next year before payments go out to customers or talks of payments going out to customers will begin. So, as I know more, I will keep you guys posted, of course. Next, and actually, let's look at Amazon's stock price. Let me share my screen so we can take a peek together. Okay, so in case you didn't know, Amazon's ticker symbol is AMZ. And for those of you who are tuning in live, as you come in, let me know how the audio sounds. I'm using this handy dandy microphone right now that I used to use to record my podcast. And so I figured I can hopefully improve the audio quality of my live stream. So let me know how the audio sounds. If you're watching the replay, you can let me know in the comment section as well. So as we see here, Amazon stock price. Oh, wait, I'm in the wrong tab. This is where I need to be. Okay. I was clicking and things weren't moving. So if we see here in the last month, Amazon is down about 4%. If we bring it back to this week, it's down 5%. And I'm sure this dip in the stock price has to do with the announcement that was just made about this lawsuit settlement. But with Q4 coming up, which is the biggest shopping season of the year, I'm sure the stock price will rebound as long as things go well for Amazon. So I'm not too concerned about this. It's kind of makes sense, right? So anyway, moving on, Starbucks, Starbies. If you are a Starbucks person, your local Starbucks might be closing. And so Starbucks did announce that they will be, I'm trying to type here around the microphone. It's kind of tricky here. So Starbucks had announced this week that they're doing a $1 billion restructuring plan. And so a lot of that has to do with their stores, and they will be closing approximately 500 store locations. They are laying off 900 non retail employees. And in terms of the retail employees, the baristas and things like that, some will be transferred to other locations, while others will be laid off as well. And they will be receiving a severance package. Now, I saw a clip from a local news station in Seattle who was mentioning that some employees feel that the stores that were targeted or have been targeted for the closures were stores that were unionized or were fighting to be unionized. So they feel as if that Starbucks is targeting them deliberately so they can stop these employees from forming a union, or they don't want to have talks with helping them form unions. So it's definitely like a slippery slope. It's giving a little sketchy. And so what I will say though is that a lot of people are not impressed with the new Starbucks CEO. They are seeing that he's just not getting it. So I've seen quite a few videos on social media where people, well, let me backtrack. So the CEO of Starbucks is trying to bring Starbucks back to its roots, where it was the hangout, it's like the local coffee shop feel, but they definitely have a more commercialized field over the years, especially with the mobile orders. People just pop in and pop out to run out. No one really hangs out at Starbucks anymore. And so, because of that, there's less revenue, and there's also been lots of bad press for a variety of reasons. And so, I think until they get to the roots of those issues, they aren't going to rebound the way they think they are going to. They no longer have their finger on the pulse of the culture. And so what we are seeing is more and more of their core customer base, they're turning to their local mom and pop shops, these stores that are less mainstream. They want that more personal feel. They also want coffee with better, cleaner ingredients. And so I think Starbucks will have to either do a total rebrand, or they'll have to start acquiring their competition. The path they're on right now, in my opinion, isn't it? But anyway, so if we look here at their stock price, this all speaks for itself, right? And I think we will continue to see a decline of their stock price until, dare I say it, they get a new CEO. I think the person they have in office right now isn't the person to take Starbucks to that next level, but that is my professional and personal experience, or opinion, I should say. So next up, we can leave this up. It's fine. So next up, President Trump signed off on a deal to sell the U.S. portion of TikTok. So this is definitely huge news. And so they've been very vague in terms of who is part of this American investor group. There have been some, guesses. People are trying to surmise who might be part of this core group of investors, but they aren't giving any names whatsoever. So for context, the deal is valued at $14 billion, and it is set to close sometime in 2026. So they still have a lot of hurdles to overcome in terms of antitrust and other things like that. So there's going to be some time before this deal closes. And truthfully, I'm surprised we've made it this far. So we will see how that plans out. I think the biggest issue is that TikTok users, myself included, are worried about how this sell-off is going to now change our algorithm, what we're going to see, what kind of data they're going to access of ours, and just the overall feel of the platform. So we're all kind of like holding our breaths and just hoping for the best. But the main thing people are worried about is the monetization of TikTok, how that's going to change. Will there be changes? Will there be improvements? Are they going to scale back certain programs? So I think for many creators and small businesses who rely on TikTok for revenue, that is what they are waiting to see. And that's the most important because cash is king, right? And many people have built a living from TikTok. And so if they make major changes that will negatively impact their revenue, it's not going to bode well for those creators or those small businesses. So as we know more, I will, of course, keep you guys posted. So next up, we have good old Meta. So we'll stay on the whole social media train for right now. So Meta made some pretty interesting announcements this week. So first, they did announce that they officially reached 3 billion active users on their platform. And so that, of course, is a big deal. But for me, I'm the person who wants to follow the money, right? And so when you look at Meta stock price, it's quite interesting. In my opinion, I would have thought that since they hit this major milestone, that it'll positively impacted their stock price, and it did not. And so there are a few reasons that I think as to why this is happening. So one, and this article is not trending as the other ones are, but apparently Meta is looking to hire Google to help them leverage AI to help them run ads. And so for me, I find that kind of funny, kind of humorous because, right, you have Meta, Google, Microsoft, Oracle, all of these big tech companies, they're like in competition with each other to be the best in AI. And so for Meta to turn to Google for help, essentially, it's kind of admitting that we're not as good as we could be. So can you help us? And so I think that is very telling as to where Meta is right now in their AI development. And so I think that's part of the reason why we're seeing this decline in the stock price. But also, apparently, Meta also announced that they're going to start offering a paid monthly service in the UK where customers can opt to have an ad-free version of Facebook or Instagram if they're willing to pay a monthly fee. And to me, that's like mind-boggling. But I guess it kind of similar to like Netflix, right? We have the ad version, the ad-free version. So it's all in the same wavelength, but social media has always been free for us to use, but a lot of that is because of ads. And so now customers have the option to go ad-free. And I'm really curious to see how this plays out in the UK. And apparently, they are already offering this in some countries in the EU. And so I'm quite curious to know how much revenue have they generated from this new service. And the reason why I'm curious is if it's enough revenue, I'm willing to bet they will bring that to the US as well. But I think there will be less of an appetite for that here in the US because I think we are all suffering from what I call subscription fatigue. And so we're tired of paying monthly fees for pretty much every single thing. And I think there will be a lot of backlash if they do bring that to the US, but I don't see them not willing to try. So there's that. Um, so we'll see. We'll see how that plays out. What else happened this week? There was so much going on this week that it was hard to like summarize what I want to focus on. But I guess the last two things will be those H-1B visas. That was such a mess coming into this week. So in case you weren't aware, H-1B1, I think that's what it's called, but these are visas where people from other countries use those visas to work here in the US. And so the fees can range from a few hundred to a few thousand. President Trump is going to increase those fees or the application fees to $100,000 per person. Now, there's a few things with that. So, one, you're only submitting an application that doesn't guarantee an approval. So, there's that. And so, there was a lot of miscommunication on this new order, I guess you should say. It only applies to new applications once this order goes into effect at some point next year. It doesn't apply to anyone who currently has this visa or plans to apply for it this year. But I saw so many videos on social media where people were trying to rush back to the US because they were afraid that if their company does not pay the $100,000, that they can't come back into the country. It was definitely a mess. The communication was not rolled out effectively, and so it caused a lot of chaos, and it didn't need to. So anyway, we've kind of all level set. We know what it is, we know what it isn't. So I think what a lot of people are worried about is, one, how's that going to impact the quality of doctors and other fields that we get in coming into this country? But I know the administration is using this as a way to kind of force companies to hire from within. Instead of bringing talent from other countries, use the talent base that you have here. But there's kind of two sides to that, right? So on one side, that talent that you might need might not be here. For certain niches, the US is not known for certain things, right? On the other hand, some companies are willing to pay the visa and bring people here so they can still pay them less than they would have to pay a US employee. So there's two sides to it. We will see how that plays out. So let's jump right into this week's earnings calls. It was a very quiet week this week. So first, let's talk about Costco. Where did it go? Is this it? Yes, this is it. I'm going to bring this here to this window so I don't have to worry about things messing up with my video. Sweet, sweet, sweet. That's the balance sheet. That is not what I'm looking for. I believe this is what I'm looking for. Yes. Okay. So for Costco, they announced their Q4 and fiscal year earnings for 2025. So their fiscal year run. So their Q4 was June, July, August. So in case you didn't know, their earnings call was on September 25th. So for their H2, which is the second half of their fiscal year, revenue is up 8%, net income's up 11%. And then this section here shows their full year results, their full fiscal year. And so full year revenue was also up 8%, and net income is up 10%. And one of my biggest pet peeves, I say this every single week, there should be percentage variances in the columns next to these two columns. Not sure why they don't do that, but they absolutely should. So anyway, so Costco had definitely a great quarter, a great fiscal year. They've seen an increase in e-commerce sales. They've also seen an increase in younger adults signing up for memberships. So right now, half of their memberships or their new signups are people under the age of 40. So that was pretty interesting. Now, of course, they are also concerned with about tariffs and inflation. So they are managing accordingly. So one thing that they are doing is they're looking to source from more US-based companies. So in case you didn't know, about 1/3 of Costco's inventory comes from overseas. And so because of the new tariff industry, well, not industry, the tariff environment that we're in right now, that is definitely a cause for concern. Costco is one of those companies where they really try to not pass on their increased costs to their customers. And they've been very vocal about that, and many people appreciate that. But there does come to a point, at some juncture, where you have to pass the cost on. So I think that they are trying to do the best that they can to avoid that. And so by sourcing more things from US-based companies, they're hoping that will help them offset those tariffs for the things that they do have to buy from overseas. Now, what was also interesting is usually when a company announces their full year earnings, they tend to give an outlook for the upcoming year. They did not do that at all. They spoke to the results of Q4, the fiscal year, and that was it. And so that was pretty interesting to see. Not sure what to make of that, but that is what happened. So let's quickly look at their stock price. So we'll say, I think it's COST is their ticker symbol. All right. So Costco is at about $916 per share. Now, this is pretty interesting. So, their earnings call was on September 25th, which is, right here. And the stock price went down after the earnings call. So, that's pretty interesting. Not sure what to make of that. So when I see this, I am getting the impression that because they didn't give that outlook for 2026, that investors are kind of skeptical and hence why the lower stock price. My assumption, I could be totally wrong, but that's what I read from this right here because they had a fantastic fiscal year. And usually, when companies have great financial results, the stock price will increase because Wall Street is happy with the results. But that's not what we see here. So I think a lot of this has to do with the fact that they did not give an outlook for next year. And so this is what we've got so far. So next up, we've got AutoZone. And so they had their earnings call on September 23rd. Let's put that here. Oh, wait, that didn't do what I wanted it to do. What is happening? There we go. Okay, so I'm going to, what is happening here? Okay, I'm going to scroll down to their income statement. Okay, so for AutoZone as well, they did announce their Q4 earnings and their full year 2025 results. And so for their H2, meaning their second half of the year, revenue is only up 1%, so it's relatively I'm like, what is happening here? Revenue is here, net sales. Revenue is relatively flat, it's only up 1%, and their net income is down 7%. And then for their full year, which is here, revenue is up 2% and net income is down 6%. And so one of their biggest pain points is, surprise, surprise, tariffs. And so they're looking to navigate that landscape. They're looking to reduce how much inventory they're keeping on hand. But overall, their main focus is to increase their market share. So AutoZone is planning to open 300 locations next year. I think that's pretty ambitious, but that is what they plan to do. And so they're hoping to be strategic with their placements of these locations and also looking to increase their online sales. And they're hoping that will turn things around for the organization. So we will see. Now let's check out their, let me make sure I'm still sharing. I am. Okay, so I lost my tab. Oh, here we go. Let's go to AutoZone. What is happening? The microphone is cool, but it's kind of like in my way a little bit. I have to change the positioning next time. Okay, so if we look at AutoZone's stock price, it's relatively flat. It's up 1%. So I find that pretty interesting since their results weren't all that great. Revenue was relatively flat. They're less profitable as an organization. So to see the stock price be pretty much unchanged this week, well, that's not true. I guess the 23rd was the earnings call. So it took a dip, a slight dip, then it bounced right back up. So at the end of the day, it's pretty much a net zero change, in my opinion. This is very interesting. So I guess Wall Street is trying to think, how do I read this? So I read this as they don't have a negative outlook, but not a positive one either. They're kind of neutral. And we're going to wait to see how things pan out for the next fiscal year. That's how I read this. Okay, and last but not least, we have CarMax. So CarMax, they had not great results at all. So let's show. And in case you guys are wondering, these are just their press releases that they publish when they are having earnings calls. So that's what I'm pulling up whenever we have these conversations. These are things that anyone can pull up just by going to the investor section of their website. This information is readily available to all of us, hence the benefit of it being a publicly traded company. I'm like, where is it? Here we go. So for CarMax, they did publish their Q2 earnings. And so we have their quarterly earnings here, their H1 earnings here. And so for revenue, which is here, I'm like, the number isn't right. What I saw, the revenue number is here. So revenue is down 6%. So here is their 2024 results. This is their 2025 results. Revenue is down 6%. And then if we come here to net income, which just means their profits, their profitability for the quarter, it is down 28%. Now, what was really interesting about their press release is they didn't talk a whole lot about improving the customer experience. They really focused on their branding campaign. So they have this new campaign called, let me go back to the top. I've already forgotten what they're calling it, but oh yeah, the Wanna Drive. It's right here. I'm highlighting it in blue. That's their tagline for their new campaign that they're kind of banking on. And I always find it interesting when companies do that because I do agree, you do need catchy campaigns to catch the attention of your customers, but you also need to improve the quality of the product or the service. It can't just be smoke and mirrors, right? You can't have these snazzy commercials and snazzy campaigns and you're on social media. And then when it comes to the customer experience, that it's just the same thing that they've always had, right? So for example, we talked about General Mills last week, and they were mentioning how they too are focusing on improving their campaigns and things like that. But for them, they need to focus on improving the quality of their foods, better quality ingredients, cleaner ingredients, less toxic ingredients. And so I find it kind of funny when that's their focus, is the branding and not the core business itself. But that's just me. So anyway, that is it for tonight's weekly recap. And so I do this recap pretty much every single Friday at 8:30 p.m. Eastern. And so the goal is to touch on the main or major financial news that happened in the week and give you like a recap of what happened, why it's important. And then we jump into these earnings calls. And the reason why I started this is a lot of people invest from a place of guessing, right? They don't do any research when it comes to these companies that they are investing in. They invest based on name recognition, brand recognition, or they're just guessing, right? I've spoken to so many people in the last, I would say, 5 years, and these people are actively investing. They've got their 401ks, they've got their IRAs, they're doing the work. But if you were to ask them why they chose some of these investments, some have no idea what they're invested in. So there's that. Others just, they're like, I don't know, I just picked it because someone told me to, or I picked it because I heard someone talking about it. Right. And so I need us to become more intentional with our investing and more strategic. And so the way we do that is to just learn. And my goal is to educate people on just how to navigate doing some research. And so when I'm going through these earnings call, we're going through their income statements. And so these are just small things you can do to begin your research. And so I always equate this to a job interview. When you are trying to get a job, you don't just get handed the job, right? These companies put you through a vetting process. So they will first take your application that you submitted. They want your resume, and that's how they kind of screen you at first. Then they'll put you through a few rounds of interviews. Once you pass that step, right, they may then ask you for references. They'll want a background check. They may do a credit check depending upon the job. And once you've gone through each of these steps, then they offer you the job. And so as an investor, you should be doing a vetting process with your investments. So you need to, what I call, create your investor checklist. So what this means is when you have your investor checklist, there are like 3 to 5 things you are looking for before you decide, yes, I'm going to invest in this company, or no, I'm not. Or it could be not right now. And so we need to kind of move into that when it comes to investing. So we're being more intentional with our investments. When you think about investing, you're taking your money that you've worked super hard for and you're handing it to this company to say, hey, I'm trusting you with this money and I want you to be responsible with it and grow this money that I'm giving to you. That's really what buying stocks is, right? Stocks, index fund, mutual funds, all the same thing. That's what you're essentially doing. And so to think that you're giving this stranger your money without vetting them first, you see how crazy that kind of sounds? So that's why I'm doing these calls. That's why I'm looking for us to have more conversations, because we need to be more intentional when it comes to investing. And it starts with taking small baby steps. And for a lot of people, right, we didn't grow up learning this stuff. We didn't learn it in school for many of us. And so we're in this place of we're just like guessing and learning as we go, and nothing wrong with that. But as you're going, you also need to be learning, right? And you kind of meet yourself where you are and learn a little bit more each time. And at some point, you will have experience and you'll know what things work for you, what things don't work for you, but you won't know if you're not trying. And so, again, the whole point is to be more intentional, more strategic, and just being more mindful of where you're putting your money versus treating it like you're at the roulette table at the casino. So, anyway, that's my spiel for the evening, guys. It was great talking to all of you. If you are watching the replay, feel free to put a comment down below. Let me know that you were here. If you have any questions, also feel free to put them in the comment section down below as well. And with that being said, I will talk to all of you guys next week. Take care.